we back, guys. So happy to have you back, Rakesh. Right, last week Nigel took your
Hey.
seat, but yeah, happy to be back. Yeah, I think this week we have a lot of stuff, right? I mean, the news cycle is flooded with things, and they're not exactly finance related, and we'll talk about some of those things, right? Like, yeah, I know you wanted to talk about Afghanistan, so we cannot run away from that topic, right? We'll talk about the Taliban's takeover and all that jazz. But yes, let us roll. Okay, so I'm gonna start with something lighter, so to get everyone on, we don't want to we don't want to go in with the war straight away, right? So I'm gonna start with the lighter topic. We have a whole set of stuff coming up for you guys, and this week, what is on my plate? Airbnb has a blowout quarter of reporting. Okay, revenue for the quarter was up 300% year on year. Okay, clarification. Last year was a bad year, right? So they did had a very, very low ball to hit. But beyond that, they've actually exceeded their growth, from 2019 numbers, right? So even if you wipe out 2020 from this quarter's growth compared to 2019's growth, that was 10% increase. So that's like pretty good numbers in my view. Although they're still a loss-making company. Specifically, I want to bring out that nights and experiences booked rose by 200% during this quarter. Okay, so I'm sure every one of you use Airbnb, and when you first use Airbnb, it's just staying, right? You book stays and all that stuff. But now they have a whole new vertical of like nights and experiences where all these people, they kind of bring you around. They're like a local tour guide, and they bring you to all the cool places that will never work in traditional travel structures. So yeah, what are your thoughts, guys? Airbnb.
Exotic experiences. Is it to do with the coronavirus recovery?
No. Hey, they've been doing this before the coronavirus already. Right. So I'm not sure
Really?
if you guys travel a lot, but because I travel
Oh.
quite a bit, so I was already using Airbnb. And
Ah.
when I first started using it, everybody, use it for like stays and all that, right? Then there was this new vertical that popped up, which was called experiences, where your local tour guides or your local, like you and I, we can start an experience company. Like we can bring people around botanic garden, or be a herbologist and just kind of show people, like this is what it is, and you can
It's like a tour guide, and then it just like
yes.
show around as a local, and
Yes,
okay.
so you can create these kind of experiences for people, and you don't even need to be like a tour guide per se. You can do like a coffee experience, at your cafe, or if you have like a calligraphy studio, you can do a local calligraphy session, all that jazz. Or you run a temple, you can have a meditation. Okay, I don't know who runs a temple, but anyway, if you run a temple, that's your thing. Pretty cool, right? But whatever it is it is a way to go about creating experiences that you will not see in the traditional like touring structure, where they go to all these places and all that. Yeah, so pretty cool.
Hey, wow. I honestly didn't know this existed at Airbnb. I thought it was just booking
Really?
yeah, honestly, I'll be completely honest with you. I
Oh
thought
my
it was a
god,
pivot.
guys. No, it's an
We're not we're
expansion.
Wow.
not tour people. We're not tour people.
Okay,
Like, we just want to
okay.
settle our own accommodations and then like just explore on our own. Yeah.
Definitely. I thought, yeah, exactly. If we're traveling and I'm looking for a space, I'll look at Airbnb. But that was the only time I'd look at Airbnb. I didn't know about this experience thing, which is also, I think, something that Expedia sort of pivoted into during the pandemic, right? To effectively save themselves. I think Airbnb, we already created some sort of infrastructure there. But I think that's great. I'm just looking at a chart now of the number of experiences booked. And January 2020, so just before the pandemic, it's hit its highest, which I thought was pretty cool. Obviously, it crashed in 2020, but it's rising since. So I thought that's pretty cool that they tried to really look at this different angle into travel.
Yeah, and I just want to put it out there that it is like super localized and super fancy. That experience when you have a foreign friend that comes to visit you in Singapore, and you will bring them to this like nasi lemak place, and then this other laksa place, and then
Yes.
you'll bring them to all the quirky places that you go to, and you spend time with your friends on the weekend. That is a big part of building experiences, and I think Airbnb has already done that. And to be clear, Expedia, Booking, a lot of the even TripAdvisor, some of these big guys, they have tried to expand their repertoire instead of just booking nights and stays. They have also looked at restaurant verticals, booking restaurants. They have also looked at doing some of these kind of guided tours and all that. But as someone that has used a lot of Airbnb, and I hosted on an Airbnb before, I have to say that the onboarding process is seamless. It's very well done, very easy, and yeah, it's pretty good, I would say. Yeah, as a host, yeah, I like it.
Just
Wow.
curious, is this like US or is this worldwide for Airbnb?
Worldwide, bro. Worldwide. It's already out.
No, as in the
Worldwide.
revenues. So when it recovered, but you mentioned like 200%, right? So this was worldwide or
Overall, yeah. Overall recovery. So the whole company recovered at 300%. I never look into the deep numbers, but I'm pretty sure in the US and Europe, some of these regions that have opened up, they've definitely become the bigger drivers, right? So maybe in Southeast Asia or in Asia, it's still a little bit more control at this point in time. Anyway, Airbnb does not have that big of a footing in Asia in terms of their revenue
In Asia.
breakdown, right? So
it's quite big in Australia as well, right? So a lot of these vacations, obviously, they can't leave the country; they will leave the state when possible to go for these sort of experiences. I know at least friends in Australia that are doing that now, just because like I got to get out of my city is effectively what they said. I mean, if they're not in lockdown, right? So, but that's really cool because I do get a lot of visitors coming to Singapore, and I've always usually take them on my usual walks, which start off in say City Hall, then we go around the Civic District, ends up in Fullerton, explain to them how Singapore used to look like, and then obviously go down to the Bay and have dinner. So actually, that's really cool. I'm gonna dive deeper into Airbnb
definitely
experience.
check it out, man. It's really interesting. Anyway,
you can get paid for it now. Yeah,
you can get paid for doing all those kind of stuff.
Wow.
It's amazing, really. And Temasek actually increased their position in Airbnb, so they bought more Airbnb. Of course, they also bought more TT. But since we're on the topic of Airbnb, is this a company that you think has the kind of longer term value for investors? Because retail investors have access to this company, right? So it's a interesting thing to look at. Do you think Airbnb has that value proposition for the longer term?
I think it's a
That's a tough-
complementary to tourism and to hotel bookings, right? Because people are looking at all these spaces which is unused. I think that gap has to be filled by someone. If not Airbnb, then who? It just happens to be the dominant market share. I think China will have their own equivalent also, but that one is more of interstate travel, like outside going in. They have their own versions also. That's here to stay, like shared economy and that whole trend. But so far Airbnb is the biggest, so yeah, why not?
Not all shared economy is the same. I just want to put it out
Yeah,
there. Yes.
for sure.
All right. So to be very exact, Airbnb has very, very low operational cost. Right. So relative to its other shared economy guys. So yes, something to note. Rakesh, any thoughts on Airbnb and its future?
Yeah.
Apparently, I'm the travel guy here. You guys don't seem to have very serious thoughts about travel.
We haven't been traveling
the
the last 2 years. We don't know what
Okay.
In all fairness, yes. It's out of my mind. I've compartmentalized it.
What is travel?
Yeah.
Traveling
which
to
is
the coffee shop.
Yeah, and if you think about it, 300% revenue growth, it's quite a blowout, right? Nobody would have thought that. Wow,
It
like
is.
the pickup is so high, people are bouncing back, and maybe the whole revenge spending kind of stuff. Yeah, Rakesh, any thoughts on this?
Yeah, I mean, I think it's a great play, right? And I think they should put more focus on this. I mean, of course, Singapore's a small market for them, and they're not really in Asia. But are they planning to go in Asia? Because this experience thing could also really just blow up, even if it's not just homestay. Like, in Singapore, I think they banned Airbnb for HDBs and condos, right? So it's effectively only landed.
It's okay.
But-
Now Temasek increased their share. There's a discussion going on. I'm dead sure on this. Yeah. You remember the days when they were saying like Grab is a no-no, Grab is illegal,
Yeah.
blah blah blah. And then ComfortDelGro was super angry with it. And then after that, ComfortDelGro took a position in Grab. Temasek took a position in Grab. I was like, okay, Grab is it's quite good. We should invest in Grab to kill Uber. Right. So yeah. That's at a level, politics do play
true.
out in some of this. So yeah.
True. No, but I think that's a great area. And where else can they look into, right? Because these two are of course complementary. But is there another angle that they can go into and really expand their app? Are they in creating this sort of shared ecosystem, if you want to call it that?
Yes.
So no, I think it's a great step. I think the numbers are looking good. Of course, we're looking towards the post-pandemic era and how that would look like. Given also with Airbnb still, a lot of its revenue is still house to house. How would that be, right? Do I need to show that I sanitize the room? All these sort of extra stuff. Would people's perception going to someone's home now be really questionable? So I think those are just extra stuff that I'm thinking in my head. But I think if you zoom out a little, it's quite a good
I
move.
think the numbers are showing that it's okay. People are okay. Like to go back and travel and stay in people's home. It's not as big a thing anymore and all that stuff, right? So I mean, when I recently opened a very small position in Airbnb before all these news came out, right? So I'm not a big
Wow.
guy. I'm not a big guy when it comes to like investing in IPOs and all that stuff. So Airbnb is like they only IPO late last year. So I've kind of broken a little bit of my things that I will not do, like invest in IPO within the first year. And I bought a small little position in Airbnb, and I thought, like, fundamentally they have already gotten so far that it's very hard to onboard any other the same amount of assets on another platform. Okay, so they have already gotten their mode in a much further than anyone else. Nobody has come anywhere close to where they are at this point in time. Okay, and I think it's fundamentally very challenging from the whole network effect kind of thing. It's like when as a traveler, I go Airbnb because I trust the platform, and also I know that all the stuff will be there, right? If you cannot find an Airbnb, you cannot find it anywhere else, or at least that's the base thought, right? And I know Marriott and IHG, Booking, some of them, they have tried to pivot into this whole space, to like do homes, essentially do what Airbnb is doing, right, with their own platform. But it's very hard because they were not built for that. They have account managers, they have a very big cut and big margins and all that. They've built their organization in the way that they do it. But Airbnb is like, today I just onboard myself, and I actually did an episode about like how I was hosting Airbnb and all, on the podcast. So yeah, definitely, I think there's fundamental long-term value in the company, and let's see if the whole like recovery of travel trade and all will benefit it. Yeah, so that's all for Airbnb. Yeah, you say?
Yeah, I just want to add one more thing. Their support service, right, is also really good. So especially for the hosts, right? So they have a lot of different like little startups or little services dangling around, right? But they acquire them and put them in as part of Airbnb to really increase the quality of the support. So what I mean by that, like they have recommended ways to actually install some kind of like door lock or like cleaning services and all that, right? And make it very, very systematic. So as a host, right, it's just very hassle-free to just open up your home. And there's a lot of best practices in doing that. That's localized throughout the rest of all the countries that they operate in, right?
Yeah.
So if you are the guest also, it's also really, really smooth. If you just want to just stay in Airbnb, you just really need to just book and just show up.
Yeah. I just want to say that they gamified the onboarding process. Okay, so they actually made it fun for me to onboard my house. Like, take a photo here, do this, right? And then there's the bar
Very cool.
to lead you to complete your onboarding process. So pretty cool stuff, right? For what Airbnb is doing. Definitely check out the company, but also recognize that it's a growth company, blah blah blah, right? This is not a recommendation. Do your own homework and all that jazz. Yeah, that's all, man, guys. Next topic. Who else want to take on?
Thomas, you want to head
maybe
first?
Yeah, sure. So this is a trend that was observed. So basically it's about telcos, right, around the world. Like, oh, telco is very boring, like they're just doing communications and stuff like that. No, they're doing more than that. Okay. Yeah, they're doing way more than that. So other than transitioning from say 3G or 4G into 5G, wherever you are, they're also trying to go more into content. Right, usually for the telco play, it's just very standard, right? They sell you this kind of landline or Wi-Fi package together with TV, right? This is a traditional model. But moving forward, that has been decoupled. So all they're going to be is just actually selling the communication asset. So your Wi-Fi or your internet for home, right? And maybe for your own mobile usage. But with the content play actually going towards services like Netflix, your Amazon Prime and all that, right? These telcos actually stand to lose a lot. in two ways, right? Number one, they're actually investing a lot of money into 5G tech because it is forced down their throats by the government. Like, we need to have 5G. I don't care how much it costs, just do it, right? And when that happens, right, they are having a lot of old infrastructure needing to be upgraded, and also they need to maintain a lot of these old systems. There's some cost to it, and moving forward, there's going to be a lot of competitors who's going to go into the 5G space also. So it's not just your 3 or 4 telcos anymore in your country. It's going to be a lot more players from outside because of globalization. You've got maybe suddenly some SpaceX satellite just set up shop, like, oh, just launch like 50 or 500 satellites around your region, right? And suddenly you can also provide 3G or 4G services. So the core services really get like competed away. And 5G is just like coming up next when they have to set up more of these satellites or what you call it, repeaters. I don't know a technical term for it, but 5G is more shortwave. So they need a lot more equipment to bounce the waves off. Yeah, that's to simplify things. Yep. So where they're going to go towards this is so let's say for China Mobile, right? They're actually launching VR mobile cloud. They're actually doing a lot of 360 degrees content and trying to do mixed reality applications. So there's more need, or rather a want that people would have, right, to actually go for China Mobile for these kind of content. SK Telecom, so it's a telco for South Korea. They're also launching this kind of Metaverse platform. So you can socialize in different virtual life. If you know about Second Life, or you've played some kind of like online virtual game before.
Second Life, man, guys. Second Life, right? It's like it's like okay, sorry, then boomer, but it's like Habbo Hotel on viral, right? Like Habbo Hotel, like on steroids. So yes.
But imagine you just wear the helmet or the goggles, right? And you're so immersed in it. So Korea, being Korea, they're also gonna put in avatars for K-pop stars, right? So you can just visit your K-pop star who's just right in front of you, and then you can like ask them questions and stuff like that. Of course, it's not gonna be them in real life. It's just gonna be an AI behind the scenes, but still the interaction still kind of like, it's kind of cool, yeah. And in the US, there's Verizon. They are actually doing Super Bowl experiences. So Super Bowl is this really huge stadium with the like American football being played, but the atmosphere is very, very fantastic. So having that immersive in that AR VR experience is just taking content to a new level. So yeah, telcos are doing quite interesting things, not just for 5G. Well, what do you think? Is this a good move for them?
Oh,
I think it's the only move. But Rakesh, go first.
Only move. So I think of course with 5G gets a lot of cost. But one question on Verizon, right? You said the immersive Super Bowl experience. So they actually get to see the Super Bowl as well in the VR.
No.
Sit in
not
a
quite.
seat, or how would that work?
Right now it's more of a replace. So like if you played FIFA or some kind of sport game, right? Every time you score a virtual goal, but you can like drag around your mouse and see like, oh, that was so cool. Like, I did this move. I know it's actually the 3D player, right? So if you follow a player or you follow a team, right, you can really see how they actually execute a certain play. It takes things to a new level, experiencing content.
Yeah. No, I think that's great. Right? I mean, it's an area that I think that it's not being tapped into. There is potential to tap into, right? Sort of AR VR experiences. BT, for example, like I know content is a big thing, right? Especially for telcos. And given the current 5G, where what it is building infrastructure effectively for the country, it's going to be loss making. So how else can I use 5G and make it profit? Make it profit making? I guess that's the question that they're asking themselves. And we've seen content come across even during 4G, right? So telco companies, I think like in the US or in the UK, we've got Verizon, we've got Sprint that sponsor certain content or certain shows, and obviously shown on their mobile. BT, there's BT Sport that invests in it. So those have already been done. Right, so I guess the question next
we have Mio TV here, by the way. We have Mio TV.
Yeah, okay, fine. You're
Starhub
Singtel
channel,
yes.
we have Astro, guys. Right, let's not forget the local guys. Yes.
Of course, I mean the local monopoly or whatever you want to call it. Definitely, right. So you've got it content wise quite across the world, and sort of what's next. I never thought they would be going into this because it's such a new space. The AR VR, right? I think started off with Oculus, with Facebook, Google's having it there as well. PlayStation is really driving in, and Microsoft is really driving into the AR VR element as well. But there's so much to go into. I don't know. Do you see it as a risk? that if it doesn't really pan out as it is, or do you see it as a good pivot or as a good extension of their service?
I think like what Reggie says, not really much choice
Reggie?
for telcos.
I don't
All
think
right.
they have any other choices, honestly, right? So this is it's a very big pivot. In a way, I wouldn't even call this a pivot anymore. It's really like taking on a whole
Survival.
and it's taking on a whole different business. Like when you pivot, right? There is the whole idea of pivot is you have something going on and it's kind of on a slant, and then you pivot towards that thing.
Some of
It's
it
not
is
like
transferable. That's
yeah,
the
so
point of
there
a
must be
pivot.
some sort of transferability of a pivot, but it feels like a lot of telcos, because they're getting attacked. It's like the banks. The banks are also getting attacked up, down, left, right by all these different providers, whether it's payments and all that. So in the telco space, they're also getting attacked by internet, the internet itself already attacked them, free calls, no more. Who uses SMS these days, right? Other than for scams. But
Yeah.
anyway, so a lot of
OTP,
the
OTP. OTP is
okay,
very
OTP.
important.
Okay,
Yes.
whatever, right? 2FA, OTP. Yes, yes, yes. But the idea is a lot of these big telcos, they've already lost their traditional revenue, and you can see the numbers really come down. Whether it's Singapore, Malaysia telco companies, they're all getting attacked. And whoever they're surviving are surviving on extremely lean margins, and they're surviving very much because they have optimized their processes. So they have cut down on the labor that they need. They have automated a lot of things. They onboard some of these. They onboard the clients in a more efficient manner. They service them in a more efficient manner. So less touch point, less cost. So those guys are surviving. Everyone else that has a very clunky process in the middle are dying, right? So it is not anywhere. It's not a business that I want to go near at all, right? So don't tell me value play and all that shit. Right? I don't want to go into that. But the general idea is that they are getting attacked. They have no place to go. So maybe this is a strategy. But if you ask me, I think a lot of the people, when they talk about AR, VR, they also don't understand that there are multiple layers to this, right? From the network layer to the platform layer to the hardware, to the content, the software development at the back, the whole experience, its peripheral accessories and all these stuff. It's a lot more. It's a lot bigger than what people understand when it comes to this whole like metaverse or AR VR kind of thing, right? So in that sense, I think it's very underdeveloped at this point in time. So don't be too soaked into how these guys trying to tell you like, oh, we're being high tech, we're going to all these places. What is the adoption? What are the numbers looking like? That's still pretty questionable. But all that being said, no doubt that this is the trajectory. People are heading towards this path, and yeah, the metaverse is here to stay, and it's a early days of development. So if you look at a business cycle, I would think the metaverse is only at the like early growth stage, where it is still
Very early.
we're still figuring out its marketplace, where does it sit? Is there sufficient adoption to create a model that works, and all that stuff, right? So super early. I'm not too big on like, calling it like, oh, it's definitely gonna be good or definitely gonna be shit. It's just understanding that it's a complex space. Yeah.
Yeah, I'm all for Habbo Hotel, man.
Bring on the old times. Yeah.
No, it's just you can experience all the classics, right, in a different
Mm.
experience. It's a totally different thing altogether. Yeah, and then you can bring some items over into other places. It's just like Marvel crossing over with DC. It's that kind of thing. It's like, oh my gosh, yeah, mind blown. Yeah. Okay. Anyway.
Yeah. Boomers.
Aye.
Anyway, yes. So I think
But-
that's that. Yeah. Rakesh, have something to add?
Yeah, there's one player. So I think I was reading something where Verizon is actually giving 5G phones to 4G users, and they could just effectively upgrade for free. So if they don't have a 5G phone, they can go and get it from Verizon, and they're providing it to them. Of course, you got to trade in your old phone, and I'm sure there are a lot of TNCs with that. But they're really banking on this 5G for this sort of content or for this AR VR thing, right? At least I think so. But when I was reading it, I was like, wow, how much losses are you taking just to get user acquisition on 5G?
Yeah, but if you think about it, data consumption is going to be a lot higher, right? In 5G. So Are we going into the space where everything is a buffet, it's like unlimited data, and so you kind of bring people up to the highest bracket of consumption, right? Unlimited data, or can you push them up the consumption because of all these additional services? The margins on data is extremely high. Okay, that's something that I think a lot of people don't recognize, because the sunk cost on the infrastructure is already there. The
Yep.
upside margin per gig sold is very, very high, and just even Circle's Live, they don't have their own infrastructure. They're using M1, I think. Right. So
Yep.
if you think about it, with that infrastructure already sunken, do you want them not to sit around and like push
Just
people
use
to
it.
use more?
Yeah.
You want them to use more. You want people to push towards using adoption, higher, more interesting things to go to, more things to do. So then people consume more data, and with that, essentially, it is pushing away some of the experience money that you use every month. Like maybe you have $300 for all sorts of experiences, cafe hopping, watching the opera, all those kind of things that you do. Okay, I don't know how many people watch opera, but anyway, so all these things that you do, and pushing that money onto the metaverse, right? Pushing that money onto a different set of experiences, and that could be a serious budget in people's wallet, right? So if you think about it, would you spend $50 more on your monthly data if you can get access to all these other experiences? Hey, maybe you will. And if you
Maybe.
go through, some of these big telcos, maybe that could be a business play, right? So it is not like definitely telcos are dead, but what is the reality? How is the adoption? It's still very early. Yeah, that's my thoughts.
You mentioned Verizon, right? Do you know if like AT&T or Sprint and Sprint are doing the same thing as well? Like they're giving 5G for free?
Ooh, I'm not sure. On
Yeah,
that, I think you have to check
right,
that.
right, right. I don't know. I was just reading a few customer. I was checking out AT&T the other day, but I was just going through some customer reviews comparing. It seems like people don't
Mm.
really like Verizon. They prefer AT&T better. So yeah,
Oh,
maybe this is a
is it an
customer service
acquisition
kind of
play?
thing.
Yeah, it's an
Yeah.
acquisition
It's just
play.
getting as many people on board as possible. Lock them in for like 2 or 3 years, and then just pile on the subscriptions, right? I don't know,
Absolutely.
but from a cost point of view, I think it does make sense also if they already have certain infrastructure in place. Data is just data. It doesn't matter whether it's 4G or 5G, right? So it's
Yep.
gotten cheaper over the years to actually have this capability. What eventually the telcos may converge to, I think, is the speed. Yeah. So or latency or things like that. You can download movies in less than 30 seconds. 34 seconds was the exact number, I think. Yeah.
Wow.
So that's just ridiculous, really, right?
It's
So
more
you
content. Exactly.
yeah, yeah. So I think it's going in that direction. But for now, people are just streaming, say like Netflix, or let's say they're doing Zoom, right? Like you can use your my Gomo plan to actually just do my work for the rest of the day. I don't even need to use the home Wi-Fi anymore. They just give too much data. I can't use it. So how?
Yes.
It might be just economies of scale also. As they get more and more people onto these kind of plans and onto a certain infrastructure level, so it's better cost structures for them. Yeah.
Cool, guys. Yeah, let's move into Taliban.
Awesome.
That was sudden.
Yeah, are we going heavy quite fast? All right.
Yeah. Let's go into the discussion of the Taliban's, right? I mean they have
So
they have taken over Kabul, so yeah. I don't know how. I mean, even FT News, BBC, all the guys, even in doing financial news, they are talking about Taliban. Right. So Rakesh,
yeah.
what do you want to lead us into?
Yeah, I mean, I think it's noteworthy, and I think it's something that we do need to talk about, given it's a weekly market update that we do. It's the biggest news in town, I guess, and I guess the biggest news is we always knew the Taliban sort of existed in that area, of course in Afghanistan. But I think one thing that I don't know, but took maybe the world to surprise was how quickly they were ready to assume control, right? As the U.S. sort of marched out of there. Maybe they took all their oil. I don't know. But and all of that, right? And lately we've heard the Kabul airport being sort of overrun. I just saw news before this podcast or before the show saying that it's gotten a little better and they're starting to resume flights. But I'm not entirely sure. And I think where I'm trying to come from this angle is how will the stock market react to it? How would the people's perception react to it? Would it be only in the crude oil industry and the crude oil stocks? Would it be in certain ETFs? Would it be on the weapons manufacturing? Or would it be industry agnostic because it's consumer confidence that you've now affected, right? I don't have an answer, but I think it's something that I could bring up and we could just discuss. I don't think we'll have an answer tonight either. But yeah, what do you guys think about this sort of stuff? Firstly, the US pulling out, and secondly, will it affect the markets?
I think macro point of view, US pulling out is very strategic reasons for that. They want to focus more resources onto China actually, so there is no gain anymore for them to actually be in the Middle East.
Well, just
Previously,
that one line, that you say we get demonetized.
oh, oops.
on YouTube. YouTube does not allow us to say that, but it's okay. Go ahead. Say we are not monetizing
we can
it anyway.
cancel it out.
Yes,
Or
yes,
even on
yes,
the
yes.
stream.
Yeah. I mean, no. As in
Okay.
yes. YouTube cancels all these things. The moment you talk about war and all that, you cannot monetize.
What are we
But
talking
anyway,
about Afghanistan?
yeah. So let's continue. And with China and all that, China specifically, it's a very, very big discussion. Yes.
Okay, so the focus goes from Middle East to other areas of the world because resources has to be
Right.
allocated there. They can't be on two places and focus. So it used to be for oil, one of the reasons, and their presence was actually stabilizing a lot of the regions there. But most of it is actually supported by the American side. So when they actually pull out, all these starts to crumble very, very fast as people start to revert to the old structures, right? And it's more of like suppression of the Taliban actually. So once there isn't a strong enough influence there, it just goes back to the old ways. I think that's quite unfortunate. As for the markets, well, oil is definitely something that has to be considered. Not really much impact you see on the prices right now. But let's say in 3 months' time, there might be some effect. Okay, here's why. In between, right, US actually created their own production capacity through like Permian oil basin in the US. All this is all shale gas. Just you can read up about technology. So US basically didn't need the Middle East anymore for its own oil production. So they are decoupled away, right, from the Middle East. But it's really, really just the US that's doing that. For the rest of the world, especially that's closer towards the Middle East, they still need to get the oil from there, right? Or maybe from somewhere in Southeast Asia, like Spratly Islands. So very, very certain. I'm trying not to use certain words. So there are certain areas in the world which has concentrated deposits of these resources, and without the Spratly Islands up yet, or certain parts of Southeast Asia is being tightly controlled by the countries themselves, they are still looking towards Middle East for most of the supply. Yeah. So who controls most of this supply, right? It's not in Afghanistan, right? It's either in Iran or it's somewhere in Saudi Arabia. Yes.
Yeah. OPEC,
So
right?
how the new Afghan government or whoever's ruling is going to move, right? Their influence, right, in that region is going to determine the supply for sure. Yeah. So I think that's the big one to consider.
So I think for a lot of these bigger global situations, right, it's very hard to have a play for it. It's very hard to have a read for it because political situations, they do change and they are very dynamic, right? And even like people are saying, oh, Taliban will go back to its old days, but really, like, what makes you so sure that? Do you really think, like, okay, let's just put it, do you think North Korea is still the same North Korea? No, right? Things are changing. There's political dynamism and things are moving. So Taliban taking over the government, it is just a change of government. It's just not the kind of change that we are used to. Democratic process where you vote and all, but hey, maybe 200-300 years ago, this was how all governments changed, right? War, you won, you take over the place. Okay, this is a new governance, right? So it is a new governance. They have interests of the people at heart. But if you talk about global play in terms of strategy and all that, I don't really have a lot of thoughts. Definitely, oil will be affected. But OPEC is losing its influence. It's not as easy for it to shift and manipulate prices anymore. But I'm not in the space, so I don't know. But I think, like it or not, a lot of your weapon manufacturers will have a very good 10 years running, right? So a lot of people will start loading up. Countries surrounding it will buy more weapons just to be certain, be safe. China does border Afghanistan. Okay, for a lot of people that don't know. So yeah, so a lot of these manufacturing companies in the arms trade, I do think they will benefit in heightened tensions, right? It's the same. I mean, just think about how when there's a shooting going on in the US, there's an increase in gun sales. Same idea applies in a global scale. When there's some shit happening in your neighborhood, you will buy more guns. You will get more prepared. You want to stabilize yourself. You want to defend your borders, right? So, I know not everybody is very big on like the arms business and all, but hey, as an investor, if it's not a moral hazard to you, then your Lockheed Martin, your Boeing, your all those guys, they have a very big business in the arms. Yeah, so that is my take. Yeah.
Interesting. No, I think that's fair, right? So I think two fronts, just as a quick summary, we can move on, is the number one, the political climate in that area, right? And effectively the destabilization of that whole area. Number one, do I protect my border against what might happen? Because the Taliban could be sort of, unpredictable. So I better safeguard myself, therefore, increasing weapons, etc., etc. And at the same time, right, so if the US has got, obviously, their own stabilization or their own reservoir of oil, if you will, how would that affect the Middle East, and how would that affect the other players in the market? And I think that's a fair point, Thomas, that you made, right? The fact that US has got perhaps other priorities, and they got a stack rank, which is which. And then they probably had a big meeting about it, and then said, okay, this is no longer a priority. It's time to move off, regroup, recoup, and then worry about the next priority that we need to focus on.
Let me throw in a little bit of a contrarian or speculative point. If you think about it, Afghan is China's neighbor, right? So if Afghan is stable, there's no reason for the US to set any military base in the region. But if they leave Afghan and Afghan gets messy, they have a lot of incentive, at least the regional players have a lot of incentive to bring the US in to set up very serious military bases, and they are much closer, they are bordering China also, right? So if you think about that whole dynamic play, maybe that will be a situation. Maybe Pakistan will open up to say that, hey, US come in, to set up some military base. India may welcome the US in to have more military bases if they not have enough yet. And the Saudis would bring them in, Iran will bring them in, or maybe it's depend. Okay, maybe not Iran, but Iraq will bring them in. Yeah, so the idea is that maybe just speculative, that having a unstable kid in town is gonna allow everyone else in town to welcome the US, right? So that could be a possible play. You never know.
Yeah, but there isn't a reason for US to be based in anywhere in the Middle East. It doesn't matter whether it's like Iraq or Afghanistan. Like anywhere in that region is not strategic for them. Yeah.
It's not technically the territory in the first place, right? They need
but even for bases, right? I mean, the reason why you have like forward bases or bases in other countries is because it's faster to get to somewhere else, right? So you have a few people that's deployed there. You can counter, or you can do some kind of tactic to divert and all that. But the whole of Middle East is not their concern. Yeah, I'm not gonna say the name of the country.
Okay. I mean, India is their concern, right? Obviously, right? So.
Sure.
They already do have a couple of bases. I'm not too sure about Pakistan, but no, I think that's fair. I think in this case we just got to see how the next week pans out. We got to see it blow by blow before we actually understand what effect it's fully going to take in the next month, 2 months, maybe even a year. Right?
Yeah, but any broad market sell down because of like this kind of uncertainty, unless there's an all-out war, I think relatively it will subside. Yeah, that is my view. It will stabilize eventually. The long-term strategy is still good companies and blah blah blah. Right. Okay. So that's that for Taliban. I think we have too much coverage about it. Definitely these episodes will get flagged. But anyway, okay, let's move on. Move on to something lighter, right? So Activision, the guys behind Call of Duty, behind World of Warcraft, they merged with Blizzard and whatever. Activision Blizzard gets Citi boost for low valuation, right? So Citi Group, has upgraded Activision to a buy rating, responding to price pressure that has hit the stock because last month, right, last week of July, actually, they had more than 2,000 former employees sign a letter calling for company to say that it's a toxic work environment, so they are going to sue the company, and there's a big bunch of them actually walked out of the company, right? So with that, their share price came down, and Citigroup says that yeah, maybe it's a good price to buy, right? They have upgraded to a buy call, right? So I brought this up. I brought this out for two reasons. One is I wanna hear your points of who still listen to analysts these days, right? Right. So this is one point, right? The analysts, what is their vested interest, and have they already bought positions and then they come out and open a buy call, or what have you, right? So this is the first part about trying to understand the analyst landscape, and when they say something, how do you interpret it? Number one. And the other part also about your thoughts on companies like Activision, Blizzard, or companies like even like Netflix and companies that are very heavy on talent and on production. When they have this kind of big workforce that leave, or they have this kind of big bunch of people that decide to stop working for them, what is the kind of risk factor that we should understand, when looking at it. Yeah.
Really
So
buggy games.
Yeah. Because we found out there was other
Suddenly,
things going on.
What, the floor disappeared? Oops. Yeah.
don't anyhow teach, the games don't work this way. Okay, anyway. Yes. But yeah, thoughts.
I think. Okay. First, your first question was analyst, right? Look, I mean, they probably maybe have a position. I don't know. Or is it simply the fact that it's Citi taking a look at, okay, this is going to be a short-term thing, and then it will rise again. So technically, if you look at it that way, buy now. Just like how during COVID, when when there was a massive market drop for a very quick, when COVID first happened, people was also saying buy now, right? Is that maybe what Citi's going for? If they have a position, I don't know. If they're just looking to make money off of it, I don't really follow analysts. I read, but I make my own decision. Let's put it like that. I'm not gonna base my decision on other people without doing my own research, and I beg all of the viewers to do the same thing. But Thomas, yeah, what about you and analysts?
I think analysts, they try to do good work, but the structure of their role is against that. So what I mean, right? So let's say there's S&P 500, right? And then you can divide them into sectors. Analysts can be divided into a fixed pool of companies, which they just cover all year round, right? And say they cover, say, 40 or 50 each, okay? And it's never often that they actually put a sell rating for reasons, right? You don't want to burn bridges. So it's very, very, very rare to actually put a sell rating, right, on a big company, especially. Yeah. So maybe you got some friends inside, or some of the management that's there, the interview and all that. Maybe they will lower the price a bit, right? Or they'll say hold, maintain, right? But never often a sell. So more often than not, you get a lot of buy ratings across the board, like in the whole entire world, right? There's this kind of skew. For the analysts and valuation itself, I don't know. It differs from institution to institution, right? Some they go like, we maintain this at this particular level, like one fixed price. But for valuation, some analysts in some camps will prefer to do valuation in ranges, right? So let's say it's between $50 and to $60, right? Rather than it's $51.57, right? Wow, so soon. How you get the 57 cents?
Yeah.
Yeah,
Nobody should do that. Okay, anyway, yes, continue.
So the one is a rating, the other one is a pricing. Don't read too heavily into it. You still need to do the due diligence. They have access to very good resources at the institution, so I still do read them. Yeah. But whether you agree or disagree with their call, that's up to you, right? You still need to do the due diligence.
Yeah, I think it's an extension of the insider situation, right? Every time you're an insider, you become a little bit nicer. You want to try to like make friends, So, pretty typical of like bank analysts, financial analysts. They have a lot of vested interest with a lot of these companies. They don't want to get to a situation. It's like media guys, they don't want to get to a situation where they nobody wants to get interviewed by them. Nobody wants to talk to them anymore, right? So there's a lot of these
Yeah.
things that are ongoing that we need to be aware of. Which is also why I tend to really like more independent research companies. They are not actively in connection with a lot of these guys. They have no like business interests. Like if you're part of the bank, I mean, Citibank say like Activision is a shit company, or they say any like Apple is a blah blah blah. Don't buy it. Right? Like who will you take a loan from Citibank? It's gonna be a little bit hard, right? So I think there's multiple layers of vested interest in that. But when you talk to independent analysts, when they are just doing pure research, they're just trying to get data and just trying to put out their position and thoughts on things. Those are pretty interesting, right? So I think those are tend to be a little bit more edgy. Right, they will dig deeper. They will be able to say things that a lot of bigger analysts will not be able to say. Right, so that's my take on reading analyst report lah, in general. Anyway, these days I think a lot of resources are getting more and more open, more and more democratized. You don't need to spend thousands of dollars for Bloomberg Terminal anymore. So yeah, times have changed. That's for sure. Yeah, but what are your thoughts on the walkout, of talent? Because they are in the business where very very much it's a human business, right? They need all these people to do the code, to do the design, to do the storytelling, and all that stuff, right? It's not like a machine kind of play. Of course, there are softwares and all, but yeah, what are your thoughts on this?
I think it's very bad. Yeah.
Yeah. You go first, Thomas. You go first.
No, because the like let's say you get a lot of people from the creative side of things, and then you got people on the engineering side of things. So all have left. They just take a bit of the organization with them, and maybe they go to other competing firms where they can apply their talent in a better way. It's a very big disadvantage to Activision, I think. There has really been some complaints inside about the culture and things like that.
This is not their first saga. This is not their first
Yes.
saga. Yeah, a few years ago they already had another saga. Yes.
Yes, and then the direction of the games, like it's becoming a little bit more watered down, and then some of the gamers don't like it anymore. It's all very profit driven. So for people on the creative side of things, right, they find it very difficult to work in that kind of environment, right? They just have to do a bit of nonsense things just to get the profit, but they cannot express themselves creatively anymore. So where they go, they might do their own thing, like maybe start an indie game or something. So they will just go elsewhere, right? And then it's just quite a big loss, especially if these people are like one of the key like forerunners, right, for some of the games. And then I think that's quite a big loss. Then basically all your fans that are looking forward to like certain sequels of a game suddenly find out the content is very very watered down, or like the storyline doesn't make sense anymore. It's like, why do you do this? Game of Thrones, yeah. So I'm not saying that happened lah, but that kind of experience, right? Yeah, I personally didn't like the ending for Game of Thrones that way. I wouldn't like to see that for a game that I also follow for quite some time lah. Yeah.
Absolutely right, and I think the talent density is so important in every company, right? We talk about retention, we talk about stuff like that, but there's a lot of costs that go with training someone new. If someone were to leave, you need to ramp this person up. There's a whole ton of expenses that effectively you consider as salary, but it's a lot more than that. There's a lot of intangibles that you're losing when someone goes, especially in the creative environment like Blizzard. Right? If someone develops this sort of game or this sort of dynamic within the game with certain graphics, just because you replace them doesn't mean, and literally the boss is probably going, create exactly that, but in a new way, right? That's not it, right? It's you can't just do that, and that's probably why you feel that the games are watered down, because they're probably told stick to the storyline, stick to this, stick to that, and the new guy coming in can't effectively express himself. And if this sort of turnover just keeps happening, the company in general will not be moving, right? It's not, number one, not somewhere you want to work for, because you're probably going to lose half of your friends in the next 6 months. Or you're using the company, right? I'm going in because it's got Blizzard there. I'm going to use it for my resume. And then when I get the next job, I'm going to jump. Either way, talent density is quite a big thing that every company should be focused on, because if not, it will lose its value.
So you think as an investor or as a potential investor, it is a risk factor, that these guys are not managing their talent very well, especially in this space?
I think so. I think they should keep their top guys, right? And not only the top guys, but they should promote a culture of retention. You can't have a company that keeps, like just like how when you look at the books and you see your retention numbers dropping and you're unhappy about it, that's just the numbers. But what about your staff? How many of your staff are you? And in most HR companies or most HR departments, look at that, right? This is where we're going at because we need to hit this sort of effective team. And in order to build an effective team, you need XXX. And one of it is team dynamic camaraderie. And if the team keeps changing, you're never going to get past the first part before you can make it into an effective team. So definitely, I see it as something to look out for.
Fair. Yeah, I think this is not their first time. This is not their first saga. So as a retail investor, you should be aware, that Activision has some stuff going on, and Blizzard is essentially an acquired, guy. It's not their main. They didn't start out alone, right? So they were independent, and then they merged with Activision and King to become the giant that they are today, right? So I think even to date, a lot of these things still exist, and it's problematic, but in my view, to be a little bit more balanced in the perspective of some of these things, it's not always bad if there is a change of workforce and all. Maybe it brings in new perspectives and all that jazz. And sometimes it's because management at the top, it's not aligned, and then it changes down and it trickles down to become a problem. But I do agree that as a company that is very reliant on talent, they are not a factory. they are a game developer, extremely reliant on talent. This is not a very good sign, and this is not their first time. So yes, that's for Activision. Yeah, let's go next one.
Who's up?
Awesome. Thomas, you want to go with yours?
Sure. So I'm going to talk about Jedis, but not about Star Wars Jedis. This is a Jedi contract from the US National Security Agency. So it's a $10 billion contract, right? So last time, Microsoft seems to have won it. Amazon complained, and now it seems that they have won it back, right? So that's 10 billion loss for Microsoft, 10 billions for Amazon. But Microsoft is now unhappy, so now they're filing a bid protest with the government. So we have to see again by October, and then we'll see who it actually goes to. So there's a bit of like controversy here, like how can a project can just pull left, right, center, right? Like, how is the assessment actually done? Like you wouldn't actually see this happening so often, but it's a high profile project, and it's something also that both companies really want. One is the revenue, but the second thing also is the kind of projects that they can work on, which can boost their R&D in some sense, because they can like double as some other project elsewhere, right? The other important thing is that they have also scrapped this whole Jedi contract or Jedi concept altogether, right? And instead, they are breaking up into smaller projects for other vendors to participate. Okay, so who are these other vendors, right? So Google is one of them, but there's also Oracle and IBM. So why, right? I am not sure, right? So for tech companies wise, Oracle and IBM, are they actually tech or are they actually consulting? Right? If you look at the portion of their business, right, a lot of it actually comes from consulting, right? And then Google, Amazon, and Microsoft, like, okay lah, can it's still services, right? It's still tech, but not sure. What do you agree with me or do you disagree?
Yeah, but I mean, it's the U.S. government. It's a piece of the pie that they probably want, regardless of how much revenue it's being brought as a whole to the group. That's what I'd say. Just as a quick answer to that.
No,
I
think
let's say for Oracle, IBM, Reggie.
Yeah, so I think for a lot of people that don't know, Oracle has a lot of legacy enterprise software. Same for IBM, a lot of legacy enterprise software, and they've been through that era of growth, right? And then after that they are in a period of decline, right, in terms of their traditional business. And IBM has tried to change, right? So with the acquisition of Red Hat, Oracle has also tried to change, but they are definitely not doing as well compared to the other big tech. But all that being said, whether can they change is still a question mark, because they already have a lot of big legacy stuff, right? But on the point of the Jedi contract, I think this is just an ongoing spat for a very, very long time already. I don't know. Honestly, 10 billion, I know it's a big project, and all that, but really for these guys, like 10 billion, not that difficult to make, for either of them, right? So I don't know,
Let
man.
it
Like,
just give Palantir lah, right? I mean,
dude, if yeah, give Palantir. I'm long Palantir. I have positions in them. Just saying. So, yeah. So yeah. My take is it is a complicated contract for sure, and yeah, I tend not to like companies to be too reliant on one or two big contracts, and these guys are not, right? So these guys, they're big companies, they are not reliant on this one or two contracts. But yeah, I don't know, man. I don't have a lot to add for this specifically.
Yeah, no, I think like I mean like I said before, right? Yes, I mean there are legacy players that are not doing as well, but some clients in sales, especially, right? Some clients you take not because of the money, some clients you take because of the status, and saying that you're affiliated with the government is one of the big things. You know that's true, right? It's
I know that's
perception.
true. That's why I hate it. I know that's
Yeah,
true.
but
That's why I
I
hate
mean,
it because we do so much free work for some of these people. Like, so irritated by this. Yeah, it's like, yeah, my goodness. Yeah. It's just for the
but yeah, so
name.
yes,
But
of
yes.
course, right? You
Yeah.
sign with whoever just so that you can put that on your deck. That when you go and pitch to another company, oh, we're affiliated with the U.S. government. We're working with the Pentagon, for example. Like this sort of stuff really boosts your other services that you might offer. For example, security, cybersecurity, or any sort of other stuff that you might have, right?
Good point.
So, it's the spill on effect that they want. And if Palantir wants it, yeah, go for it.
I'm sure
But I mean,
Palantir wants it. I'm sure they want it, right? Whether or not they can handle that contract, at such a scale, that's a whole different story. But yeah,
yeah,
I think that's a good point. I never thought of it that way. I know of such practices, it exists, but it didn't cross my mind to think of it from that spin. So yeah,
absolutely.
cool.
Yeah, it's build
Yeah.
credibility. That's big. That's big.
Yeah, guys. Okay, so
Nice.
let's move on to the last point. Yes.
Last bit, yeah, just a quick one on my side. It's actually with regards to sort of a partnership, right? Logistics partnership between Gojek, Grab, and a Indonesian company called Antigira. Antigira, just for those that don't know, is effectively a logistics service that focuses a lot on the last mile in Indonesia, right? And I think it's noteworthy just to bring this up because they're partnering. Gojek and Grab are both partnering this logistics company, and I find that a little weird, right? Because if Antigira is looking to grow a bit more in Jakarta, Gojek has a much bigger presence than Grab, right? Gojek sort of infiltrated all of this, and at the same time, Gojek is a logistics company, and they also do last mile. All across Indonesia, right? From just not only deliveries, but like medicines or food, or I think they in Indonesia they can actually stop at a store, buy what you need, and then travel to you and give you specifically that item, right? So what would that play? What are they really looking at? I think one last thing as well is noteworthy that Gojek and Tokopedia were already affiliated with Antigira before this partnership, right? They sort of fused to create GoTo Group. And this is linked with Antigira and affiliated with it to handle Tokopedia's as well as Gojek's last mile, right? Sorry, for those that don't know, Tokopedia is like a massive e-commerce site in Indonesia. I think of it like Lazada, but Indola. I think the last I heard it was 1% of Indonesia's GDP economy. So it's massive
Whoa, that's
conglomerate.
huge. Yes.
It's absolutely massive, right? So I think, yeah. What are your thoughts? What do you see Grab in this?
Capital needs to exit. That's my thought. Capital needs to exit. Okay, so if you look at the life cycle of how startups work and how capital comes in, of course, in the early days it's a tinkering process, right? Nobody really wants to invest in you. After you have some traction, there's a lot of money coming into the space, right? So, and if they cannot invest in you, they will invest in your competitor, right? So Uber, Lyft, Grab, Didi, they are all the ones that succeeded, but along the way they definitely had other competitors that have either pivoted or just exited the business altogether, right? So, and at some point, the ultimate exit is into the public market, right? So they exit into the public market, and then private capital pulls out, and they will go and find the next big thing to invest in, and the cycle kind of repeats, right? So I do think at this point in time, with a lot of the listings of delivery last mile companies, whether it's DoorDash, whether it's Lyft, Uber, which done a few years ago, and Grab's exit, using a spec mechanism. And then with this, it's all showing signs that investors want to leave this sector in general, right? So they have fueled the growth. They have gotten things to where they are, and they want to leave, especially of these private capital, right? So they can leave for various reasons. One, maybe valuations are coming down because the public market will over time figure out like a valuation structure for some of these things, and they'll be like, maybe I cannot exit at this price anymore. Right? So why not let's just get it out ASAP, right? And before prices keep coming down and what have you. It's like the period where SaaS companies were flying off the shelf, at very, very high valuations, and these days they're not listing at sexy numbers. So private capital wants to exit all the ventures that are not as popular in the public exit, right? So ASAP. I do think that is that. If you are talking about like, company growing and all that, I don't think. I honestly think this is the main reason. Private capital wants to exit the space. Yeah, so that's my thought. Yeah, Thomas.
I think for Ante Raja, they have very good economies of scale if they can just work with the two largest like logistics or delivery companies in Indonesia itself, right? So I'm not sure. They might have some underlying deal together with them to go and share some profit. It might make sense for both companies, like Gojek and Grab, to actually do that. On the flip side, it also works out well for Grab and Gojek to have their competition using the same service, just out of valuation purposes. Like say, now, like last week we showed you this slide that we only covered say 65 or 70% of Indonesia. Now, because with this partnership, we've got 75%. Ta-da, right? So it might actually work out that way. I don't see them as like very hard competitors because Grab isn't going so hard in Indonesia. It knows that that's Gojek's territory, or rather now Go-To's territory. So wherever they can get certain market share with the lowest cost possible, right, they would do that. But for the rest of Southeast Asia, then Grab will fight very, very hard. Yeah. So I don't think these kind of partnerships will come out, say, in Vietnam or say in Thailand. Yeah. Grab would rather have to do it their own.
Got it.
Yeah. Cool. So that's it. Anything else on this?
No, I think that's it. I think one last note just think about is, because we're moving towards this, how would that affect the riders in Gojek, right? Would there be less market for them? Would there be less demand for them? Or would they move across, right? You never really know. But I do know that's something that to think about when this sort of things happen. But no, that's it.
Cool, guys. Thanks for tuning in every week. This week we had quite a tangent discussion about a lot of other things that are going on in the world. So yeah, if you want to continue to discuss with us and talk about anything personal finance or investing related, head over to our Telegram group and sign up for our weekly newsletter. Right? See ya, guys. Take care. Woo.
Bye.